The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, as we usually do, we're going to start out with the German DAX index. And as you can see, we made a 1.618 expansion up there yesterday. We're in the midst of making a small ABCD correction as we go through, today's trading. Today is the start of the Chinese New Year. It's the year of the rooster. And to all of our Chinese listeners, I might say, Gong Hei Fat Choi Lei Si Dao Loi, which means Happy New Year to you and may you have the best of luck. That's about the only thing that I can speak in Chinese other than thank you, goodbye, hello, and I'm hungry. And where's the toilet? Those are the ones that I know. Anyway, let's move on to the next. We had a request from one of our listeners up in Canada to talk about something that he had looked at on the internet, and that is a potential head and shoulders pattern in the interest rate arena. Basically, with the interest rate, what we call this, you'll see this is this is the actual yield on the 10-year bond. And this person, they were looking at, this came from somebody on the internet, not from one of our the listener sent it to me, but it was from somebody else. And they talked about this potential head and shoulders pattern in the Treasury note yield. Folks, I do not see that here. There's three reasons. First of all, I don't see any really good symmetry between the left shoulder and the right shoulder. The right shoulder is actually higher than the left shoulder, and there's not a whole lot of there's not good symmetry between the shoulder and the high and the shoulder and the high. Those are the things that I think are very important. Head and shoulders patterns are some of the one of the most important patterns that we have in technical analysis. And it was first brought to everyone's attention by a man named Schaubacher. Schaubacher was the father-in-law of Edwards, of the technical book Edwards and McGee, and he's still, McGee is still living in Boston, and I think he's in his 90s now. But what I did when I started looking at these patterns, I would go to Don Mack at the Investment Center bookstore, which was right down the street from where Conti Commodities' office were. Don gave me the Gartley book back in 1970. And basically what I did is I went through and looked at the bibliography in Gartley's book, and he had all kinds of names in there. There were names of Wyckoff and Schaubacher, and oh my gosh, there were just so many of them that I would go to the original source to see what they were looking at. Well, what happened in 2000, on April the 17th of 2000, happened to be Arch Crawford's birthday, Dr. Andrew Lowe from MIT, who was in charge of their, he had a chair at that age. That was 17 years ago. Now he's super famous. But he came out with an article in Business Week talking about this alchemy can yield pure gold. And what he did was, he tried to make the case for the fact that technical analysis had some really great applicabilities in doing two things. One, they were highly predictable within limits. And the second thing is that they were able to repeat these patterns over and over again. So he looked at 800,000 patterns over a 37-year period in the stock market and wrote this paper about it. And about a year after that, his book came out called The Non-Random Walk Down Wall Street. And what Dr. Lowe did there was basically repudiated Burton Malkiel's work that he wrote a book called The Random Walk Down Wall Street, and Dr. Lowe came out with the Non-Random Walk Down Wall Street. Well, believe me, folks, that changed what happened at TFNN and Financial Times and Bloomberg, because before that we were seeing very few charts. But after that, the charts just exploded, and now they don't even talk about anything without actually showing a chart of these things. So this is where the whole process went through, and I happened to be in an area where I had access to all those books. After I went to work for Drexel, one of the things that I was able to get in the contract was an educational clause that I would be able to take some of the money from commissions that I had made to put it into further education, buying books, and also attending seminars and things like that. And so that's how I accumulated many of these books over the years. But a lot of this stuff goes back a long, long way. Now with artificial intelligence, they can do a lot of things with testing these things, and we'll see what's going to be happening with some of these things. Anyway, this is what we're looking at this morning with this head and shoulders pattern. Now, the reason why I don't think it's a head and shoulders pattern, all we have to do, and we did this already because we've already had a nice move off of this, is if we look at the 10-year Treasury note here, you'll see here on this 4-hour chart, we hit the exact 61% retracement in this yesterday, and it's already rallied almost $1,000. From that point. So that's one reason to say that it's not a head and shoulders pattern. And the second reason to take a look at it is to look at the Treasury bonds, and you're going to see pretty much the same thing. They missed the 78% retracement by a few pips, whereas the T-notes hit the exact 61% retracement. Now, folks, there's a big difference between the Treasury notes and Treasury bonds. Treasury notes are 6 times larger than the Treasury bonds. You could find this out by just going to the CME website and looking at the open interest and looking at the volume each day. There's 6 times the notes are traded each day versus the bonds. The bonds are more volatile, but the notes are a much, much larger contract. They're the largest of any of the contracts that we trade, well over 3 million. So keep in mind that CME website, www.cme, has a great deal of information that I think is, very, very important to us. We'll see here what we've got going here is, since we're talking about the open interest, I just wanted to bring something else to your attention. We talked about this yesterday. We have a little bit more information for you today, and I will bring this up to you so that you can see it a little better. And this is going to be the E-mini futures from yesterday. And you're going to be looking at the far right-hand corner over there. You're going to see that the volume on it runs around 1.7 million each day. You can see on the right-hand side there the minus 17,783. That means open interest is dropping. Folks, I know it looks bullish, and I know it wants to go to 29,000 very, very quickly, but be very, very careful in here. Let me just bring you up to date here in the Bible of trading for commodities as they talk about open interest, and I just want to show you the formula for it, because this really can't you can't deny this stuff. This is just numbers, folks. When you have a rising market and rising open interest, a lot of people are coming in and buying. Now, if you have a rising market and falling open interest, the market is weakening. The Dow Jones and the NASDAQ have been losing open interest every week. Yesterday was the first day that we started losing open interest big time on the E-mini. This is not a bullish situation technically, folks, but remember, I happen to be wrong quite a few times, but let's pay attention to this, because this has not led us astray very often. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're going to take a look here at the bonds on a little bit longer term time frame since we were talking about it at the beginning of the show. This is the Treasury bonds over the last couple of months here. As you can see, we had this really strong rally up to the 38% level that took almost exactly 1 month. In fact, it was 5 weeks, which is a little bit lower. And that the low that we made just the other day was right at that 61% retracement in the notes and almost exactly 786 in the bonds. And now we're in the midst of a rally. However, if we go below that low of 147, this is going to set up an absolute beautiful ABCD structure, taking it down to the 136 level. Longer term, interest rates are going higher. I don't think there's any question to that. Since we're talking about interest rates, folks, if you remember, the Treasury bonds topped about a year and a half ago up at the 177 level. And when that was happening, of course, we had a big three-drive pattern and a whole bunch of other stuff up there. But if you'll remember, well, some of you did, because one person brought it to my attention, is the fact that the interest rates, when we got up to that level, we were seeing a big drop in open interest as prices were going higher, and that was short covering. And once that short covering was over, you can see the bonds just literally came unglued. They fell of their own weight. So watch that very, very closely, and just keep in mind that if we do get below that 147 level, it's going to be interesting to see how it all turns out. Now, I've had a request to take a look at something here just a little bit differently for a second, and this is in the soybean complex, because we are over this new moon, and this responds pretty nicely to new moons and full moons. So if we take a look at this, you'll see here in the March soybean oil that we had a really strong rally, went up exactly to the 61% retracement at the $37 per pound level, and now you can see that the bean oil now has a price target of right around 33, which is about a point away right now, and that would set it up for almost a perfect 20-man line, a 61% retracement, and an ABCD swing. Folks, the one thing that H.M. Gartley, Harold McKinley Gartley, talked about was buy the first ABCD correction in a bull market and sell the first ABCD correction in a bear market. So this is what we want to be looking at. So pay close attention to that, because this could be a really good buying opportunity in bean oil, which might also be coming in also with the soybean meal and the soybeans themselves. So this is going to be a really, really interesting one, to look at it, down the road. Okay, we had one other question here about one of the greatest stocks in the world, and that is Amazon. We're going to bring up and talk to you about this a little bit. Here again, you can see we had a beautiful Gartley pattern here back on the 3rd of January. We brought this to the attention of the folks at in the newsletter, and also the 24/7 folks, and this has been a pretty big move to the upside. I actually missed the buy on that because of the gap up on the 8th of January. Just missed it by hair, but we completed the ABCD pattern, and we almost made a double top. This stock was down about $30 pre-market, but then what happened was it's rallied back a little bit with some of the others as bargain hunters come in, looking for good value. But this is a very interesting chart, because it's been one of the best movers in the whole stock market movement. I don't know which one the best. Yeah, you're right. It's very close to George Orwell, but it's just amazing how much you can get on Amazon, and it's so easy. I mean, and if you want to return it, they give you the label and send it right back. I mean, my goodness, you don't have any hassle with anybody. I mean, it's just an amazing company, and well, what are you going to do? Okay, let's move on to some others that we've had a talk about here. I wanted to bring this one up again, because this is an important one, because you're seeing a pattern here that is just about ready to fail, and it might have failed already. But this is the Qualcomm that we were looking at here. We hit this level of 54.88. We rallied up to 56.98. We rallied a couple dollars, and then bad news came out on the stock, and it put it below the 54 level, which means this 61% retracement now has been broken, and this market looks like it's getting ready, to most probably go lower. That would be the bottom line of what I'm watching right now. So we'll look at that one day at a time, of course, and we'll see how they come out. We have another question about the crude oil market. I want to bring this one up here, because you'll see it. That's not the crude oil market. This is the bean market. Since we're talking about beans, let's just take a quick look here at the bean market, because it has a really good pattern here for a potential buy here. If it gets down there today, it would even be better because of the new moon. But you can see here that if we get that beans down about another 20 cents, that would be equivalent to getting that oil down there too. That would be a really good, what I think, low risk buying opportunity, because we're down about 8 days in a row in beans. So we should be bottoming here relatively soon, and then we'll see what the next move is going to be. Now, if I can just find the crude oil, there's the $64 question here. I know I've got it somewhere. Where did I put it? Well, I'm not going to worry about it right now. I'll move on to one other one that I wanted to look at here. Hold on a second. I'm doing repetitions here, folks, so bear with me here. I have to search this thing out. I know what I wanted to add. Here it is. Here's a crude oil. Bear with me here just a second, because this is a real interesting one, because let's put this up here. This shows you the importance of this level of 54. Hold on just a second here. I'll answer your question in just a second here. young man, if you'll give me a second to get this put up here. This is the crude oil. As you can see, the importance of that $54 level. We hit it yesterday by just 54.10, I think was the high, 54.15. Now we backed off a little bit, so we need to get above that in order to get the thing moving. Now the question that someone is asking in the den is that sometimes the price of oil will be different than the price of meal and the price of beans. That is correct, folks, because when you're trading soybeans, you're trading basically two products. You're trading the soybean oil, which is used, of course, in margarine and paint. Those are the biggest uses. It has many, many other uses in medicine and other things. And then when you crush the bean, you get 20% of oil, and then you get 80%, 75% in the meal, which is used for feed and artificial food and stuff like that. But that's the main thing that it does. But you'll see a difference. And the reason for that is the oil market is basically the cooking oil market for the whole world. And the Asian population uses a huge amount of oil, because they do all of their cooking, of course, in the oil, and that's what makes it so good. I'll talk a little bit more about soybeans when we come back, how they came to the United States through our good friend Henry Ford, and then we'll be right back with a few words from our sponsor.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I was talking about soybeans. Basically, soybeans were introduced to the United States by Henry Ford. He was trying to find an oil-based paint, and he couldn't get large quantities of oil. Before we had soybean oil and stuff, the only thing they could use for lacquer, which was basically ground up insects. And so he brought the soybean here basically for paint. It turned out, it had uses like margarine and other stuff, but he was mainly responsible, the one that brought it in from China back in the 30s. And then late 30s, it began being traded at Chicago Board of Trade and became one of the biggest markets in the world. And then, of course, Brazil came in. China came in, and now it's used everywhere. So it's a very, very important. It's probably the world's most perfect food because it's a perfect balance of fats and oils. And but that's neither here nor there. Okay, let's take a look here at a currency because we have the Prime Minister here today from the wonderful United Kingdom. And as you can see, we've had a breakout here in the British pound above the 78% level. This morning, we pulled back to that 78% level one more time at 125.40. So if we can hold that 125.40 level, this tells us that we're most probably getting ready to move a little bit higher. I would find it rather hard to believe that this is going to be a bad meeting between Prime Minister May and President Trump because they're really lining the pockets right now, saying what a wonderful relationship is, and they're comparing her to Margaret Thatcher and Trump to Ronald Reagan. I think it's a tad early to make that prediction, but we'll see. We'll see what happens with it over a longer period of time here. So we'll see what's going to be going on here with some of this stuff. So anyway, let's take a quick look at some other things that we're watching. Mainly the market that we're really paying attention to. Just give me 1 second here because this is the key one here because it's related to the dollar. Yes, here we are. You're going to be able to see what we're looking at here in the dollar because we're at such a critical level here in the dollar. I'll do the NASDAQ in just a second here. We'll take a look here. You can see the since the 5th of December, we've made a 78% retracement. And basically, we've stayed there for 4 days. Now, I sent this out yesterday thinking that, because it had been there 4 days and not being able to get above it, that this was a sign of resistance. And, of course, the market backed off all the way down to the 106.05 level. And then, of course, it's rallied back 100 pips already this morning because foreign exchange moves very, very beautifully as far as technical patterns and following the ratios and stuff. But when you're looking at a daily chart like this, you're just trying to get an overall view of where the possibility is for resistance. So we really need the euro to get above that 108 level, and then that changes everything. And that means the dollar would begin to get weaker, and you'd be looking at something that would probably cause commodity prices to move or other things of that nature. But in order for that to happen, you've got to get that euro above the 108 level because it's still in a downtrend. There's no question about it. I mean, in fact, almost all the currencies are, with the exception of the yen, and even the yen dollar is also in a downtrend on a smaller time frame. Okay, we've been asked to take a look at the NASDAQ. Just give me 1 second here so I can put it up here to let you take a look at it. And we'll see this is where we are with the NASDAQ, and you'll see this is the long-term chart going back over, well, it's not long-term, it's the last 6 or 8 months, a daily chart. As you can see, we did hit that 1.618 expansion up there, 51.65. We're challenging it again today, but we do have the ABCD pattern there also. One of the questions that I received this morning from one of our listeners from Sydney, Australia, was about this news about the Dow Jones at 20,000. It's making the newspapers and the TV places over there, thanks to Rupert Murdoch, about what these things are going to be looking at, and that is the question was, have we ever seen this much of a news thing about a price level in the market? Well, we had a little bit at 10,000. That was Ralph Ocampuro. That went back in the mid 90s. And then in 2000, if you'll remember, the NASDAQ hit 5,000 in March of 2000, and that was on the cover of all three magazines, Business Week, Time, and U.S. News and World Report. All had a picture of a bull in various places. One, the bull was pushing the bear over the water in chains, and another one, the bull was running over everyone. And the headline was NASDAQ 5,000. On that weekend, March 23rd and 24th of 2000, I was at the Money Show up in San Francisco, and believe it or not, people were walking through there. This was the dot-com bubble, folks. People were walking through the place where you have all the displays and stuff, showing their equity runs of how much money they were making. I gave a talk to about 350 people that day, and believe me, I was so bearish because of a pattern similar to this, and it was you couldn't get anybody to even listen to you. It was just one of those things that was really amazing. But remember, I just do patterns. I don't understand the basic fundamentals of the things that some of you folks look at. So that's neither here nor there. We'll worry about that later. If we take a look at the S&P here on a 4-hour chart, you'll see we have this huge gap that we had Monday when we gapped above 20,000 in the Dow, and you'll see what's going on. Someone's asked a question about the people that we know. Hey, folks, let me just give you a little bit of a background here about TFNN and stuff. I was invited to go to Kiev, Ukraine, last year in May to give a 2-day talk. I did one in Munich, and I did one in Kiev, two in Kiev. And I did Copenhagen and also London, but the one in Kiev, this is just a very, very almost all socialist, but it's a pretty cool place. You can see the Russian tanks and the Ukrainian tanks because of all the fighting and stuff. But it was relatively calm. But the main thing is that when I went there, I had 6 or 7 people come up to me and asked to have a picture taken because they listened to the show on TFNN, all 6 of them. I mean, that is a real tribute to the audience that Tom was put together here. They did a great job, so that was just. Tony, were you at that meeting in San Francisco? I know you lived there, but oh my gosh, I maybe that's where I met you. Holy cow. Yeah, well, that's really good. One of the people here in the TFNN den was at that meeting. Tony, I don't know if you remember, but I got up on the table and I stomped my feet and I said, boys and girls, I said, ladies and gentlemen, I said, you're looking at a freight train coming down, a tunnel at 1,000 miles an hour, and you're not ready for it. And one lady called me 2 weeks later, and all I said was to sell out, get out of your NASDAQ stuff if it took out the previous Friday's low. One lady called me, well, I'll tell them, finish that story later. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, I was finishing the story about the weekend of March the 23rd, 24th of 2000. I was at the Money Show in San Francisco, and I gave this lecture about the possible top in the stock market in the NASDAQ, and I told the folks, put your stop below the previous week's Friday's low. If we get below that, stand aside for a bit, and you'll be able to buy it a little bit cheaper. I didn't say a little bit, but I said cheaper. Anyway, about a week later, the next Monday, it took it out. I mean, it was just very, very quick. And a lady called me a couple of weeks later from San Francisco, the only person in the room, 350 people, that called me, and she thanked me for telling me about this. And I said, well, you were able to get out? Oh, she said, no. She said, I just think it's interesting that you did this and that it worked. She said, I'm staying long. She said, this is something bigger than, pattern recognition. And I said, okay. I said, well, thank you for, bringing it to my attention. The next weekend, I was in a meeting at Pepperdine University. It was at the Regents meeting. I was asked to give a talk there because one of the people that was a regent at the university happened to be a good friend from the old Drexel days that we had done pretty well with. They had a huge endowment, and they asked my opinion on what they had, and all they had was .com stocks, folks. It was just amazing, all the stuff that they had, and I went through them one at a time. There were about 20 of them, and of course it was sells on everything, and they had to vote on it, on whether we should get out of this or not. And because they had made so much money on the way up, they were willing to get out of them. The vote was about, I think there were 4 dissenters out of 12. But anyway, they got out of it, and of course, they saved 62% of their portfolio, and this was a huge amount of money. I mean, in the multi-millions, and I was really lucky because they sent me a really nice crystal drinking glass, which I still have to this day. Anyway, that's neither here nor there. Okay, let's move on to the next one here that I think we ought to pay attention to, and that is this New York stock. Well, I wanted to finish. Yeah, let's just do the New York Stock Exchange one because time is going so fast here. I want to show you this because it's very, very important what we're watching here. This is the if you'll look at this New York Stock Exchange Index, you'll see that we actually gapped up. This is the equivalent of when we gapped up to 20,000 in the Dow. The previous high in the Dow Jones had been 19,994, and we gapped. That was the high. We gapped above that high, and then we went to 20,000 immediately, and so far we've been to 20,100 as we come into this new moon, which is going to be interesting. And since we're talking about the new moon, we want to remind you that we're going to have our good friend, well, I think he's a good friend. Of course he is. Norm Winsky from Astro Trend will be our guest coming in with us on Monday, and we want to watch it also very, very carefully. Now, let's take a quick look here at the silver and gold. We'll look at silver first, because we have held this level here. This is the one that we were looking at. You'll see that the market did go down exactly to the 382 retracement around the 1670 level per ounce, and is held. That's the equivalent to that 1183 that we had in the gold. We're trading very close to that level right now in the gold. So it's interesting to see how this is going to come to pass, and we'll do one thing at a time. Folks, we do have a bifurcated market here, which I know that's a big word, and it's certainly a big word for me too. But it means that, we've got the stock market for the NASDAQ is doing something different than the stock market for the New York Stock Exchange Index and also the S&P 500. So those are the ones that we want to pay relatively good attention to, because if we watch those, we'll get a better idea of how the market does this turnover that it usually has during these times. I had several. I had 2 emails in the last couple of days about this potential in gold. Folks, we are trading right at the magic number now, right around that 1184 level. If we can hold that and get some strength out of here and stay above the 1180 level on a closing basis, especially with this new moon coming in here, we've got a real chance for something really big in gold. Now, if it doesn't stop at the 1185, that just reduces the possibility of what I could think would be an explosive blow-off. But I'm going to finish the letter this Sunday, and I want to focus on this and show some examples of what's happened when we've had these markets before, much like we had on election night. If you remember, we left a big gap on the New York Stock Exchange Index. The following day, it didn't even show the move down because it wasn't open. And unless you were following the E-mini and the NASDAQ and the S&P on the overnight charts, you never saw that the market dropped 800 points in the Dow. People weren't even aware of that. So we want to see how the market moves out of this area, and that is the key to be watching. We want to watch that more than anything else, because that'll give us the energy that we need to get out of here. If I'm right, and that's a big if, of course, but if this does lay out like we think it is, it's got a really good chance here for something, really, really dramatic to happen. And whether it does or not, what we're doing is we're waiting for a perfect setup. That's the bottom line. And whether we get it or not, that remains to be seen. But we will keep it in mind no matter what. I'm going to do a lot of work with it over the weekend. Look at gold, silver, and platinum and where we are. And all of this is related to the dollar, because if the dollar begins to weaken again, that means money will move into the soft commodities and the hard precious metals and stuff, and we'll get it. So if the dollar strengthens from here, this gold market's going nowhere. That's usually the case, but we live in different times, and remember, the man who owns the gold makes the rules. So that's another important thing to watch. But this level of 1184, 1183 is very critical. We're trading there right now, and if it does hold this level, then you've got something that you can hang your hat on, and it could be pretty good. Now, the trigger mechanisms, if we get back above 1,200, would be the first trigger. That would be $20 off the bottom, and as you realize, that we've had nothing other than these $17 to $20 moves in gold ever since December the 16th. So it's been, well over a month. It's been 6 weeks, and all of the moves up and down have been $16 to $20. And we've rallied quite a bit off that level. So it's going to be very, very interesting to see how this all, plays out over a period of time. So those are some of the things that I'm, looking at for potential for the new year, to see if it's going to I'll see if it's going to come out to what I think is going to happen. We'll have to wait and see. Anyway, just because there's a lot of news about this 20,000, this happened before. We live in, nothing changes. The people feed us the information, and all we try to do is look at the pattern and say, okay, is this what we're really seeing or not? Who knows? But that's neither here nor there, but we'll keep an eye on those as we always do. Okay, we had another question, and I hope I have the answer. I think I had the chart ready to go. This was the last question that we had. Aha, it was, and let's just take a quick look at it here. This was about the rest of the markets. This is the emerging market right here. As you can see here, we've come up, and we're touching that 61% retracement again. As you can see, this market has been in a very strong bear market for well over 8 years. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I have a question that someone had asked about. This is one of the craziest markets ever. Folks, this is a very normal market. There's nothing crazy about it. Let me tell you an example of crazy. Back in 2000, there was a guy down in up in the Silicon Valley named Mark Cuban. He now owns the Dallas Mavericks. He had a company called Broadcast.com, and he was selling it to Yahoo. And on the last trading day before they took over the stock, it was trading at around $150 to $250 a day. In other words, that's how much the swings were. And on that particular day, that stock moved almost $1,000, 150 up, 150 down, 100 up, 200 down. It was the wildest thing I've ever seen. I kept that chart, and for some reason I misplaced it. I would love to show it to you because the swings on that chart that day were just absolutely unbelievable. I didn't trade one of them, but the swings were just, amazing. You stop and think that it turned over the whole capitalization of that stock in trading in one day. Of course, Yahoo bought it, and you'll never guess what happened after that. Anyway, that's neither here nor there. So keep in mind that that's what happens as you're looking at some of these things. So this is not wild at all. Wild was 2000. That's the wildness. The stock would come out with good earnings, and it would double in price. And this is nothing like that at all. This is very, very orderly. The market participation is nothing like it was then. So keep in mind that this is a very, very important thing to be watching as you go through and look at some of this stuff. So remember that that's what we're looking at. So neither here nor there. We'll take a look at it and go from there. But we do have a new moon. We're the year of the rooster, so we're all going to start crowing pretty soon. And that'll be a lot of fun, and we'll keep our tigers growling and make everybody very, very happy. That's the whole process of working here at TFNN. We've got some great information with some really smart people, and that's what makes it a lot of fun here working with Tom O'Brien. Let's take our hat off and hear the sound of one hand clapping, because the man has done a fabulous job putting some really super people together, and I'm proud to be able to, be along to the organization because of the folks that we've met, and may live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.